Please pardon the following interruption for a public service announcement.
Welcome to the Investing in Intelligence show, where we talk about artificial intelligence, companies, stocks, and trading. I'm James here with my co-host Kai, and today we'll be talking about Marvell. I want to remind you that the opinions expressed on the show are just that, opinions. Nothing that we say should be taken as specific advice to invest in a particular way. So Kai and I just recorded about 10 minutes and then realized we weren't recording. So it's not going to be as much of a surprise this time around. But I do have a big surprise for you today, Kai. We're going to go back and look at our acronyms. So, to kind of explain what I'm talking about, at the beginning of the year, I forced Kai to make a 5-letter acronym. Each letter in the acronym is a stock, and he was only allowed to pick one AI stock. I did one and I called it Scuba. Each letter in Scuba is a stock that I picked. And Kai did one, and his is called NTXGB.
It's a real
So,
word.
Kai, did you want to?
It's a real word. Perfect acronym. I obviously
What
beat
is
you
it?
at
It's
the
a real
acronym.
word. How is it a real?
I don't know.
Okay.
Yeah. Go ahead.
So, did you want to look at your NTXGB first, or did you want to look at mine?
Because you messed up. This is an amateur hour. We're professionals, James. I want to learn about your Scuba first, and then we'll go back and do my NTXGB.
Okay, so we're going to start with Scuba, and I want to just preface by saying I have no idea why my first pick was Snowflake. I haven't owned Snowflake all year. I don't even know if I owned it. I don't even think I owned it at the beginning of the year. So I have no idea why I picked Snowflake. It was obviously a terrible decision. Yeah, not much
You
else
don't
to
have
say
a
about
position in Snowflake?
No, I don't even know if I've ever owned Snowflake.
I have a fairly significant position in Snowflake. I will say that it's one of my only positions besides a few other positions that I'm down on for this year.
Yeah, we kind of picked each other's stocks for our, I don't know why, but it seems like we kind of picked each other's stocks for the acronyms. Anyways, so Snowflake was the first one in my Scuba. And on January 2nd, so I took the price, January 1st, the stock market was closed. So I took the price from January 2nd. It closed at $195. And I took yesterday's closing price for the second price to compare it to. Yesterday, it closed at $133. So that's a negative 31% change on Snowflake. Luckily, I didn't actually lose any money on Snowflake because I didn't own it, but for some reason, I put it into my acronym. Now, the second one in my acronym I did own, but I sold it probably way too early. So Kava on January 2nd, which I owned last year. So I've been owning this since last year.
James loves Mediterranean food. It's Mediterranean food, right? I've never eaten a Kava.
It's fast Mediterranean. So I would say it's the Chipotle of Mediterranean. And I was sending you pictures last year. Actually, I was sending you pictures of me in line. It's like, hey, this line is out the door. This food is amazing. You need to invest in this, like I was. So I think I got in around 30 or something, 30 something. And then $42 was the price on January 2nd. And as of yesterday, it was at 86. By the way, it went even higher. It was in the 90s not long ago. But I sold it before, I want to say I sold it 60s, 70s, somewhere around there. So it's overall made a 104% change since I put this in my acronym.
Well, Kava and Chipotle have been on a run. They've just been kind of dragged back by the whole sector. I feel like they were the last of the sector to finally be weighted down by the anchor that is, for example, Starbucks. So
Yeah, that's a good point. Yeah, Starbucks and McDonald's kind of started that steady roll downhill. So the next one, which I was actually really positive on, and it's had a pretty wild ride. It seems to always have a wild ride, is uranium stocks. CCJ is the most famous, but I just chose the ETF so I could have a vowel in my acronym. So URNM is an ETF. It started the year at $48 and now it's at $51.36. So it's been significantly higher, but it's come back down. It's been kind of shot back down recently. Uranium hasn't done as well. So 6.9% overall.
the other thing for our listeners out there, URA, stock ticker, URA is the uranium ETF. So
There's
I've had a
there's
position.
URNM and there's URA.
Yeah, I've had a fairly good. It just depends on where you enter at. However, I've had a pretty good position in URA and made pretty significant returns from URA. So you and I both were on board with a uranium pick, your uranium miner. So
Yeah. I like both URA and URNM, but I don't know why I chose URNM for this instead of URA. But anyway, so we're in that we've done SCU of Scuba, and we're about to get to the B. The B in Scuba is BTC $45,000 was the starting price, and then yesterday it closed. Technically, Bitcoin never really closes, but yesterday, let's say midnight, it was at 64,590. So from 45,000 to 65,000 is a 43% increase.
The two things in the news for crypto, especially Bitcoin. Did you see Finch came out with basically an apology to Bitcoin? He's basically apologized and said he was wrong about Bitcoin. Did you see that?
No, I didn't see
Yeah,
that.
you'll have to look that you have to look that up. It was very interesting. It came across my news today. Obviously, Bitcoin too, although we've seen a shifting of the winds, a shifting of the breeze in regards to everybody coming along and politically in regards to their support of cryptocurrency. Trump has been a big supporter of crypto. So with the odds of him increasing about getting elected, we may see be a tailwind for cryptocurrency. So
Yeah, we talked about this several episodes ago. Now, I put on a trade. I have a separate like allotment of money just to trade, just kind of for fun, because I don't want to have FOMO. So I have a little bit of money set aside to trade crypto with leverage. And like 2, 3 weeks ago, however long ago it was, when Bitcoin hit 57,000, I put on a leverage trade at like 3, 4x leverage. So if I made $1, it would have been $4 because it's 4x leverage. So unfortunately, I closed that trade out when it hit 59 because the trade went on and on. Like it went on. I was expecting to close after like a week for a quick catch up, but a week later it was still in the 50s. And I'm like, oh, it's still in the 50s. Maybe I should close this. So unfortunately, I closed it when Bitcoin hit 59. And then, of course, here we have this 14% recovery. So instead of making 14%, I would have made 14% times four since I had 4x leverage, but I didn't make any of that because I closed it too early. But that's beside the point. Going on to Amgen. My last pick was Amgen. Amgen I did own, but I wound up selling it earlier in the year. So Amgen 287 was the price on January 2nd, and yesterday it closed at 330. So that's a 14.9% overall change. So if you take my five stocks and average up their percent changes, that takes me to an overall percent change of 27.7. So if I had done equal weighted in this portfolio, the SCUBA acronym, so far this year, I'd be up 27.7%. And I mean, obviously, the big killer here was Snowflake. You don't want to have a big negative percent like that. Snowflake murdered me.
I don't think Snowflake's a bad pick, James. Let's give you. I mean, I think it would have been better. I think it would have been better served by picking something like ServiceNow or even Palantir. Another software play would have been better, an end play for AI, or even maybe a cloud. CloudStrike, or who knows, different software play. But
In retrospect, they say vision is 2020 in hindsight. There's some saying like that, but at the beginning of the year, Palantir was actually considered more risky than Snowflake, but the roles have switcherooed there a bit. Anyway, so if I had invested $60,
you're picking one in the particular space, and you got that one wrong. I wouldn't. And the year is still young. I mean, we have earnings this quarter. Snowflake could be one that
let me
catches up.
finish up on my sheet here. So $60. By the way, we'll get to that in a second. But after we go over years, I might not want to stick with the same acronym for this year, rest of the year. But we can discuss that in a second after I do yours. So if I put in $60, I have NTXG. So if I put $60 into Scuba here, on January 2nd, today my Scuba portfolio would be worth 77. If I put $100 in today, my portfolio would be worth 128. And the S&P is up 18% year to date. I would have beat the S&P by 9%. The NASDAQ is up 23% or 22.5%. I would have beat the NASDAQ by 5%. So not terrible, but also not fantastic. Do you want to look at yours? Are you ready to go ahead and look at yours?
Let's do it.
I think the outcome of this, since we already did it before. Go ahead.
Vomit makes me think it really didn't go well. However, I think that you were doing the vomit because basically NTXBGB means nothing. I think it was just letter vomit, and you're like, Kai can't play this game very well.
So for those listening, I put an emoji next to each of our acronyms. The emoji next to mine was an attractive scuba mask and snorkel, and the emoji next to NTXGB is a vomit emoji because what is NTXGB? I mean, what is that? You didn't have a vowel. You have to have there must be a vowel in an acronym to make it sound good.
They had to have been stellar picks. So I'm
just imagine if you'd put a uranium ETF. It could have been Zuntagaba at least. That at least sounds better. You need some kind of vowel in there.
We should use a word and then pick something from the word. But I do remember we had two of the picks the same, essentially, something like that. So
I don't think we did. I think we just had,
just
yeah,
one.
just one, which is Bitcoin. But yeah, okay, let's speed run this. So Nvidia started the year at 50, closed yesterday at 128. So you had a 160% increase on that. Tesla started the year at 250, closed yesterday at 252. So you had a 1% increase on Tesla. XOM, which is Exxon, started the year at 101 and closed yesterday at 115 or 116, we'll call it. You had a 15% increase in that. Google, excellent choice, started the year at 140, closed yesterday at 188. You had a 35% increase in that. And last but not least, in your NTXGB, you had Bitcoin, which started the year at 45,000, closed at midnight yesterday at 64,500. So that's a 43% increase. So overall, you had a 51% average increase in your portfolio. So if you had equal weighted money into that, $10 into each. So if you put $60 in on January 2nd, today you would have $91. If you'd put in $100 on January 2nd, today you'd have $151. So you beat the S&P so far this year by 32%. You've beat the NASDAQ so far this year by 28.5%. Now, I want to just commend you because this is excellent returns. Now, I didn't put NVIDIA in mine. So you had a good one there. Your Bitcoin was your second best winner, and Google. Technically, you had two AI. Well, I don't know if Google's an AI stock or not, but Google's more an advertising stock, I guess, than an AI
I
stock.
would say Nvidia as well. Google. I would have changed my pick on Google to start off. I mean, this was kind of, I think, prior to the release of Gemini around there. I mean, I've been less than impressed with their chat AI, but we'll say, yeah, and it's taken a lot of flack for that. But Google's advertising revenue, I like. We've done episodes on Google. We should do one on Snowflake. We should do one on Snowflake.
I, I don't like Snowflake. I don't know why it was my acronym. To be honest,
We don't have to do ones we like.
okay, but to be honest, I don't want to be stuck with that in my acronym for the rest of the year. So I think we should come up with a new acronym. Although two acronyms a year, I know that's a lot to ask, but I don't want to be stuck with Snowflake and Amgen for the rest of the year in my acronym.
Would you? So what? So let's talk. Just what would you change? So you would take Snowflake off. Would you leave the Amgen on? So you would leave basically Kava, Uranium, and Bitcoin, or what would you take off? Let's just say what would you take off? You don't have to pick a
I
new
mean,
one.
the point of the acronym is to come back and see what mistakes you made. But I would probably, I know this sounds drastic, but I'd probably just take off everything. If I was allowed, I mean, am I allowed to do more than one AI stock? If not,
No, we'll do this later. Just which ones would you remove? Would you? We're halfway through the year. Hypothetically, if you would
I'd
remove all
keep Kava
five,
and Bitcoin.
you keep Kava. You would keep Kava even after the run. You keep Kava.
Oh, you mean for the rest of the year? Oh, I see what you're asking. You're saying like for the rest of the year. Oh, okay, okay.
Whatever you want to take out, what would you remove?
Do I get to add back after that? I definitely take out Snowflake, and I might leave Amgen. I might leave Amgen, but some people are saying with the Trump presidency, it might healthcare might not do as well. Healthcare stocks might not do as well, but I don't know.
Yeah. So I mean, for me, um, Tesla's probably the one I would take out. Although Tesla, I kept adding to that position. I mean, you and I talked about Tesla multiple times, and from 250 all the way down to 150, I added to that position. This is not for our listeners out there. This isn't just a hypothetical exercise. James and I actually do deploy money based on our conversations, and so we did these acronyms and we deployed certain money. I will say the one of mine that I did not deploy significant money to was Google. And I wish I had. Google and Apple both dropped at the same time. You and I talked multiple times. I deployed money towards Apple and did not deploy money towards Google. Now, both would have worked out, and I wish I would have done both. But it's a great exercise. Maybe please give us comments. Come up with your 5 stocks for the rest of the year, 6 months, and maybe we'll. Maybe I'll give you a pass because I do think Bitcoin has just started. James and I also had another bet that I think I'm going to get a cookie on. Do I get a cookie at the end of the year of winning this one, James? Do I get 2 cookies?
So we had a bet on Bitcoin hitting 100K by August something, which it's probably not going to do. That'd be drastic if Bitcoin hit 100K by August. So Yeah, you'll win a box of cookies on that one. Yeah, definitely. I mean, and also, I think we probably had a box of cookie bet on the acronym. I'll have to go back and review I'll do a forensic review of our text messages.
Well, please leave us in the comments too. What kind of box of cookies would you get if you could? I mean, I just was at Subway. I hadn't been to Subway in a long time. Speaking of Kava's getting me hungry, they have their double chocolate chip back. So maybe just maybe one Subway cookie, James. That's all I'd like. I'm a Subway cookie guy, so
Subway cookies are pretty good. I'm not gonna lie.
they're
There
not
are
bad.
better cookies. If you live in a city, you've probably got like Tiff's treats. I don't like crumble cookies. Okay, getting off topic here. Let's jump into
Getting off topic,
Marvell.
let's talk about Marvell, which was not in either of our picks. And this is one, James, that I suspect you and I may differ in our opinions on. Um, you may have picked Marvell at the beginning of the year. I would not have picked Marvell at the beginning of the year. Currently, Marvell Technology, ticker symbol MRVL. So give our listeners a rundown what Marvell does and what do you like about it, Jim? What do you like about it?
Yeah, absolutely. So Marvell is a producer of optical chips and networking chips. But let me just specify what I mean by optical chips, because obviously that means nothing to someone who doesn't understand what that is. So there are two primary types of chips used in AI: electronic and optical. Electronic is more of the traditional chip that you think of. Now, electronic chips do the heavy lifting. So, matrix operations, deep learning, neural network processing, control logic, that's all the traditional electronic chips. But optical chips are getting bigger and bigger. And optical chips essentially transfer data between GPUs. They're really good at transferring data between GPUs. They actually have higher speed, lower latency. They're more energy efficient, but they are more costly and difficult to produce. So, optical chips are more of a specialty niche type of thing to manufacture. Marvell does that, and they're a big player in that. Also, Marvell has recently gotten into custom ASICs. So, a big trend that everyone who's interested in AI investing should be watching is this movement from GPUs, which are general AI chips, to specific ASICs, specific task AI chips, which we call ASICs or AI accelerators, special designed AI accelerators. So for companies like Google, Amazon, whatever, they might have a specific type of AI inferencing they want to do. And rather than using an NVIDIA GPU, which is a very general purpose AI chip, they'll have someone like Marvell or Broadcom design a specific chip. So just to so that Marvell chips are used in public clouds, AI, 5G networks, cars. So they have different sectors, but their biggest sectors are actually data center enterprise. So data center is 70% of their revenue and enterprise networking is 13%. So in other words, you got an 83% exposure with this company. That's actually pretty rare. A lot of these companies like Broadcom have a whole hodgepodge. Marvell also has a hodgepodge, but you're looking at 83% of their underlying revenue is exposure to data center and enterprise networking.
Yeah, I mean, an area of growth that we're seeing in regards to cloud networking, GPUs. And so, give me just in general, what do you like about Marvell? I mean, not large EPS as far as a investment going long on. So, if you were saying, James, are you buying or selling Marvell?
Well, so first of all, I like their relationships. Microsoft is a massive buyer of Marvell optical chips. Marvell is growing faster than Broadcom. So twice as fast as Broadcom, actually. Even though Broadcom has higher revenue and Marvell is like the younger brother of Broadcom, still Marvell is growing faster. Cisco is trying to compete with Marvell, but they aren't doing it very effectively. And yeah, so these custom AI accelerators that Marvell is making, they have three big customers, three big hyperscaler customers. They had two, and they just added another one. Now they don't name these hyperscalers, but financial analysts believe that they are most likely Google, Microsoft, and Amazon. So not bad bedfellows to have. Yeah, and when you ask about the financials on it, so they just finished their Q1 2024. In that quarter, their data center sales were up 87% year over year. So, yes, they had some declines in enterprise, telecom, and consumer segments. But once again, we know that the vast majority of their underlying revenue is going to be from data center. So the gross margins are also really, really good. We're looking at like 65% for gross margins, for operating margins, 30 to 40%, but increasing. So this is one of the rare instances where I see Morningstar put a fair value that's actually above the current price. So Morningstar put a fair value of $75. Price today was ranging around 72 to $74. So when Morningstar puts a price on it, they're talking about right here and now, not future pricing. They're talking about what's the fair value right now, and 75 is their fair value, and the stock is actually below that price. So, what we're looking for, and this is something that if you haven't been listening to Chip Stock Investor, which is a great podcast, I'd recommend, you might not have caught this. We're looking for a recovery in overall chip makers. Okay, so there should be an upcoming recovery in the chip industry, and it's been down. It's been down for a year now, and it's been in the gutter. But we're looking for a recovery. We're looking for, I don't want to say a super cycle, but we're looking for a much bigger cycle than we've ever seen before.
Why is that? Why is that? Why is that?
It's largely due to AI. There are some things like automotive that are, and also enterprise PCs that are expected to recover, notwithstanding the AI boom. But I think a lot of it is due to AI, because AI just, it doesn't only need chips for the AI training and inferencing. It also needs a whole host of other smaller chips, like power chips, like switching chips. There's all sorts of chips that go into these data centers that are necessary for AI to be trained and then deployed. So yeah, I mean, there's just a lot of we got a lot of chips we're going to need. Not to mention, we're upgrading consumer devices like the iPhone, laptops. We're upgrading lots of devices for the AI revolution, and it requires a lot of different types of chips. Look, so of 33 analysts, 91% consider it to be a buy, 9% consider it to be a hold, 0 say to sell. So there is, and by the way, today was an AI sell-off day, but Marvell was up. You look at Nvidia down multiple percent, Broadcom down multiple percent, and guess who's up today? Marvell. So there is a trade going on here, and usually when I pull a stock like this for us to look at, it's because I've heard some whispers, and I've heard some whispers on this stock. People like it. They are just starting to roll out their custom AI accelerators. They're going to be big. So I think this is an early one to put on. And to answer your question, I am buying Marvell because of their custom AI chip business, which I believe will overtake eventually the general GPU business, and because they have a massive exposure to AI with close to 87% of their overall business coming from data center enterprise chips.
So you're expecting the revenue growth to just being started, because the PE currently Marvell's trading at is 50. And so that, which is extremely high in my opinion in regards to their PE. And so what EPS are you expecting them to grow at next year? Is it going to go from 1.5 for the year to 2.5?
Yeah, so some of these companies are tricky with the PE. I saw a trailing PE of 22 on Yahoo
The
Finance,
current
but
PE
once
is
again, when
50.
you
The current PE is 50.
So I can pull up Yahoo Finance. I don't know how you calculated that, but it said 22. Let me just double check it. But yeah, so I said 2.8. I'm hoping for next year's earnings 2.8. So the forward PE is 55, but the trailing PE is 22. So you're correct that the forward PE is 54.95. Trailing PE is 22. You know what? That's something, something we discussed multiple times is what does it mean when the forward PE is lower or higher than the trailing PE? Well, in this instance, when we have a forward PE that's way higher than the trailing PE, that would seem to indicate that analysts think that earnings will be lower, future EPS will be lower than they've been over the last 4 quarters.
Well, I think that currently what the stock is trading at is $75 a share with an EPS of, let's just say, a high EPS of 2.5. And I think what you're saying, and I'm just playing devil's advocate here, is you're expecting more revenue growth, and that's going to drive the stock higher. I think that the price currently of Marvell, so to sum it up for you, I am not a buyer of Marvell currently because the price is too high. However, it is one that is on my watch list. So I don't hold a position in Marvell. Whereas other AI bread and butter plays, I hold a position in. However, some of those AI plays, for example, ASML or TSM, are to me proven plays, and I am not against sort of an unproven play. And I would say proven in regards to large revenue. You're talking an EPS of 2.5 for the next year. So I don't see the current valuation. I disagree with Morningstar. However, you're making a good case for the future for me. And so I am not currently a buyer, but you've given me something to think about.
So you just referred to Marvell as not a dominant player, and I actually agree because they've made a transition. I'm just pulling numbers off the top of my head here. Like I just said 87 a second ago. I meant to say 83% of their overall income goes to like data center and enterprise networking. Another number I'm going to pull off the top of my head. I believe it was 2014 when their current CEO took over. And before 2014, they had a pretty bad business makeup. He has transformed the company and he's made some really big transformational acquisitions of smaller companies, even medium size, for their scope, for their scale of income. And so he's transformed the company, diversified it, and moved it in the direction of AI. And what we have now, and I just want to reiterate this one more time, Marvell is one of only two major companies that are selling custom AI chips to the hyperscalers, Microsoft, Amazon, Google. You want to be in that space because I'm seeing chip makers who are custom making chips for LLMs now with numbers that make NVIDIA's GPUs ashamed. I'm seeing chips that can perform 100 times, 200 times faster than NVIDIA GPU on inferencing. So maybe in the future, NVIDIA's GPUs are used for training, but not for inferencing. We're headed in that direction. NVIDIA is threatened by these custom chips. Okay, now I can't say for sure that Broadcom and Marvell's chips, it's more of these prototype chips that I see are like the 100 times faster, 200 times faster than GPUs. They're no mass scale. They're not in current production, but there is a chance there that they could be in production and threaten NVIDIA's GPUs for inferencing. I'm not talking about for training. I think NVIDIA's GPUs will be better for training long run, but for inferencing, that may not be the case long term.
Yeah, I mean, so it will be interesting to see what the future holds. Obviously, if let's just say Marvell would to go ahead and then in a year be $125 a share, currently at $75 a share, you held long, that's a 60% above 50% return. So I'm not saying no to Marvell. I'm just saying I'm not a current buyer. You're convincing me otherwise, but this is why we're doing the show. And we've seen more growth you and I have both talked about Bitcoin, right? I could very well see a scenario where Bitcoin goes to over 100,000. I could see that. I could see that scenario. You and I have talked about that. That would be up almost 100% return. So I'm not saying don't deploy your money on Marvell. I'm just saying you're having a hard time at least making a case for me at the current price. So
Well, earlier today you were telling me, "Oh, James, I hope you bought Berkshire Hathaway and UPS." So everything is relative. You just mentioned Bitcoin. Your success in investing is judged on a relative basis. Okay. So we had this discussion last week, and I want to continue it while we close up today. Berkshire Hathaway from trough to peak over the past few weeks is up 8%. UPS from trough to peak over the past few weeks is up 9%. IWM. IWM, which is the small cap ETF, is up 14%. So while UPS and Berkshire Hathaway did well, if you had bought small caps over the past few weeks, you'd be up for the average itself 14%. Many of the small caps are up way more than 14%. So even though those things did great, remember, we judge ourselves on a relative basis in the stock market. And so technically you would have done better. You would have made the right decision if you'd said no to Berkshire Hathaway and UPS and just went in on small caps over the past few weeks.
Well, it's actually what I did. And so, I had very large positions in IWM, Berkshire, and UPS. But some of these companies have UPS is a
You
good
didn't mention
company.
IWM earlier.
Yeah. Oh, yeah. I have a very large position in IWN. For those of you out there today, I actually
IWN or IWM? Do you even know
the
which
Russell
it is?
2000, the IWM. Yeah. So
Okay.
I took a very large position in IWM, but this is where you and I would think. I think it's putting all the different information we have available to make informed decisions in regards to our investment, and that includes technical analysis. And so, yes, I had large positions in IWM, Berkshire, and I had a large position in UPS. Currently, for our listeners out there, I took profits, actually took realized gains in both IWM and Berkshire today. I think that I would hold both of those actually, but I went ahead and did that today. I still hold a very large position in UPS. UPS has earnings coming up, but you can use information to guide your decisions. And that's one of the reasons why we're doing this podcast, so that you can learn information about what Marvell is, where it fits in the space, and decide for yourself what is a good entry price. Because we haven't seen, basically, AI plays have not all of a sudden just gone away. It's not like Nvidia is not profitable. It's not like, for example, TSM or ASML or SMCI aren't going to show revenue growth. We're just seeing a rotation in out of chip stocks, for example, or AI for a period of time. Meta is another one. Meta, after the last earnings, took a large position in Meta. Meta had a run up, and now Meta's back at its 50-day moving average, and some of the money profit taking took place out of Meta, and they bought things like railroads. I have a large position in railroads, actually, James. I took a very large position in waste management. So you may be seeing some of that going on. I'm not saying that it's a bad thing. I'm just saying you can get burned by buying a stock at a very high valuation, and then all of a sudden a pullback happens in regards to that space. And so,
Yeah, I've heard this rotation argument so many times over the past year, and how many times does it take for it to die? So what I would say is we have earnings. We have quarterly earnings calls coming up soon. And guess what? We're going to find out once again, time after time after time. We always find out that the companies with the biggest earnings growth are tech companies, and they're the big tech companies, and they happen to be the AI tech companies too. So we always have to come back to reality, which is that the market rewards growth, and it's the big tech companies that are growing the most. Anyways, we have to wrap up. I did want to talk about JD Vance and how the market hates Trump's vice president pick because he seems to be very anti-big business. But I think we're out of time, so maybe we can chime in on that next time.
yeah, let's talk about next time. Obviously, was a lot in the news this last week, but yeah, thanks, James. Please check out Marvell. Learned a lot from James in regards to these ASICs, and but yeah, also I will go eat at Kava, and I look forward to my cookies, along my Subway cookie, along with my Kava meal.
I think Kava would be better tasting than Subway, but Kava might be more expensive and have unwanted after effects. I'll leave it
Do
at
you
that. Thanks
think?
for tuning
Well,
in to our
hold on,
show.
hold on, hold on. Before we leave, are they too stuck up potentially at Kava? If I take my Subway cookie into Kava to eat, are they going to look
Kava is
down on
not a
me?
stuck-up place. So Kava, just to give you a quick as we finish up here, Kava's gotten in trouble for having a low cleanliness score in its New York restaurants. So I don't think of Kava as a stuck-up place. You're going to find quite the contrary when you go into Kava. It's a Chipotle. If anything, they need to clean a little better to be up to par with Chipotle. All right. Thanks for tuning into our show. Please give us a like or comment, and we'll be back in the next episode to cover Qualcomm. You can find all our holdings and trades at investingintel.ai. Thanks so much, Kai.